This program is brought to you by Real Estimate. Get a free real estimate of your home's value today on the realestate.com.au app.
Welcome back. There are 2,659 auctions this weekend. That's up 11% when compared to the same weekend last year. New South Wales will hold 1,050 auctions with about 860 in Sydney. Victoria will hold about 1,100 auctions with virtually all of them in Melbourne. Queensland will hold about 260 auctions with about 160 in Brisbane. South Australia will hold roughly 160 auctions with virtually all of them in Adelaide. Western Australia, Tasmania and the NT will hold 14 auctions between them. And the ACT will hold 72 auctions. Taking a look at the most viewed properties going to auction this weekend, and in New South Wales, the top property is 27 Lucy Street, Ashfield. This Art Deco two-bedder has an asking price of $1 million. In Victoria, the top property is 184 Kooyong Road, Toorak. This home, designed by Guildford Bell, was built in 1975 and is constructed in a U-shape around a central courtyard. Asking price is about $5 million. In Queensland, the top property is 73 Arroll Street, Camp Hill. This modern 5-bedroom home has 3 bathrooms and 2 parking spots, has a pool and a rooftop terrace. The top property in South Australia is 7 Selkirk Avenue, Black Forest. This 3-bedder has a pool and a big outdoor entertaining area. The top property in Western Australia is 57 Duke Street, East Fremantle. This 3-bedroom weatherboard cottage has been renovated. And the most viewed property on the REA Group website this week is 7 Burnett Street, St Kilda in Melbourne. This home was originally built in the 1850s and is called the Fengar Cottage. It's been luxuriously renovated since then, containing 5 bedrooms, 2 bathrooms and 2 parking spots. The home blends period features and modern elements. It's got a north-facing, low-maintenance backyard with a trampoline and a shed. Asking price is $2.5 to $2.7 million. For more on property, I caught up with Eleanor Creagh from REA Group a little earlier.
So we're starting to see that the auction market is warming up ahead of the spring selling season. So we're seeing that this weekend there's more than 2,600 auctions scheduled nationally. Now that's set to be the busiest weekend for auctions since May. And over the next 2 weekends, even more auctions are scheduled. So certainly activity starting to warm up with the spring selling season now in view for buyers and sellers.
Looks like we've got a super Saturday in Melbourne with more than 1,000 properties up for sale. So some good signs here for the market.
Yeah, we are seeing that auction activity is picking up, and certainly in Melbourne we've seen that the number of new listings hitting the market has increased. Auction activity has increased as well. So more than 1,000 auctions this weekend in Melbourne, which is up a little over 10% year on year. So a bit more activity than this time last year, and certainly heading into spring, buyers in Melbourne are going to have a lot more choice. So total stock on market in Melbourne at the moment is at its highest point since 2018. So buyers really having a lot more choice than historically been the case over the past few years, and also relative to some of the other capital city markets.
Does that mean with more stock around, are places taking longer to sell, or is that not the case? Or
certainly we're seeing that it's a different story across the different capital city markets. So we're seeing a bit of a 2-speed housing market at the moment, whereby Perth, Adelaide and Brisbane are seeing a lot stronger conditions for sellers. There's a lot less competition amongst sellers, with total listings in all of those markets well below the prior 5-year averages. And that's creating much stronger selling conditions and putting sellers in those markets in a pretty good place heading into spring. However, if we look at some of the other capital city markets, specifically Hobart and Melbourne, buyers have a lot more choice and sellers are facing a lot more competition from other sellers, and as a result, properties are taking longer to sell in those conditions.
And just generally, how have clearance rates been holding up over the past couple of months?
Clearance rates have been holding relatively firm. They've eased from the stronger levels that we saw earlier in the year. Much like price growth, we saw that the year really kick-started with prices accelerating across the board in most capital city markets. And we have seen that throughout this typically quieter winter period, although auction activity has been stronger than this time last year, those clearance rates have eased off a little bit. They're still holding relatively firm though, and buyer demand as well remains pretty robust, continuing to fuel a fast pace of price increases in some of those smaller markets which have less stock, whereas price momentum is weaker in those markets like Melbourne and Hobart, where buyers have a lot more options.
And then obviously spring selling season starts on the 1st of September. This is like the big time of year, isn't it, for property, where we expect to see a lot of homes coming up for sale over the next few months?
Certainly we are expecting an uplift in listings activity across the capital city markets. We're already seeing that this year, that there has been a continued strength in new listings over the past few months across every capital city market. And in Melbourne, that's been the case for the past year. So it could be the case that some sellers are trying to get in ahead of spring in anticipation of potentially there being more listings coming to the market in spring and more competition with other sellers. So we're maybe trying to get ahead of that uplift in listings activity that we're certainly expecting to see into the spring selling season.
And we've heard from the Reserve Bank a few times basically saying rates will be on hold for this year, but cuts potentially next year. If there are some cuts early 2025, would that give the market a bit of a jolt as well?
Certainly we're expecting that the next move for interest rates will be lower at some point in the first quarter of next year. We typically do see that when interest rates start to move lower, that does incentivise buying activity, and buyers do also tend to front run that move, so to speak. So if we start to get more clarity around the potential timing of interest rate cuts later this year, we could see that home buying demand is buoyed further by that expectation.
Great. Eleanor Creagh, thanks so much for your time.
Thank you for having me.